The net asset value, NAV, of a mutual fund represents the per-unit price or value of the fund's assets minus liabilities, divided by the number of outstanding units. While it is a widely used metric, there are lesser-known facts about NAV that investors should understand. 1. NAV does not reflect market value potential. NAV is not an indicator of a mutual fund's growth potential. A lower NAV doesn't mean the fund is undervalued, nor does a higher NAV indicate overvaluation. Instead, performance depends on the fund's underlying assets. 2. Impact of dividends on NAV. When mutual funds declare dividends, the NAV decreases by the dividend amount. This is because the fund's total assets reduce by the distributed dividend, affecting the NAV calculation. 3. Daily calculation. Unlike stock prices, which fluctuate throughout the trading day, NAV is calculated once at the end of each trading day based on the closing prices of the fund's assets. 4. NAV and fund returns. Fund returns are calculated based on NAV changes over time, but they also factor in dividends and capital gains, providing a holistic view of performance. 5. Not comparable. Across funds. Comparing NAVs of two mutual funds is misleading. Each fund's NAV depends on its initial pricing and the performance of its portfolio since inception. 6. Effect of market timings. NAV is based on the closing market value of the underlying securities. Orders placed during the day are executed at the NAV calculated after market closure. 7. Expense ratio impacts NAV. The expense ratio, which includes management fees, is deducted from the fund's total assets. Higher expenses reduce NAV over time. 8. NAV and load charges. If a fund charges an entry, front load, or exit load, back load, the actual price an investor pays or receives will differ from the NAV. 9. NAV's role in SIPs. In systematic investment plans, SIPs, the number of units purchased is determined by dividing the SIP amount by the prevailing NAV. Lower NAV means more units, but this doesn't necessarily affect overall returns. 10. Mutual funds can trade above or below NAV. Some funds, especially exchange-traded funds, ETFs, or closed-end funds, may trade at a premium or discount to their NAV, reflecting market demand and supply dynamics. Understanding these facts helps investors avoid common misconceptions and make informed decisions about their mutual fund investments.